Good afternoon, everyone. Welcome to the second webinar in the Global UDAN webinar series organized by the Development of International Trade, Services and WTO Directorate of the ICAI under the leadership of its convener, CA Abhay Chhajar, and Deputy Convener, CA Dr. Sanjeev Kumar Singhal. The topic for today's discussion is the global trade revolution and India's trade policies and the role of chartered accountants in this. We have with us today CA Hansraj Chugh, who's a member of the Development of International Trade Services and WTO Directorate of ICAI. CA Hansraj Chugh is a fellow chartered accountant, a fellow company secretary, and a law graduate and insolvency professional. He has over 3 decades of experience in professional practice relating to indirect taxes, foreign trade laws, including foreign trade policy, customs, FEMA, GST, indirect tax-related matters, and banking-related laws. He's the founding partner of Messrs. ASHM and Associates, Chartered Accountants in New Delhi. He serves various Indian corporates and MNCs in his professional practice. He is currently a Central Council member of ICAI for the Council term 2025 to 29 and nominated as a chairman of the Board of Studies, academic, deputy convener of Group on Development of Rural Economy, and vice chairman of the Financial Reporting Review Board, the FRRB, for the year 25-26. He's also served as a Central Council member of the ICAI for the Council terms 2019 to 2022 and 2022 to 2025. During his terms in 2019 to 2022 and 2022 to 2025, he has served on various committees.
I believe that's the okay. Good introduction.
No, sir. There is a lot more that we can do to introduce you to the and all your achievements to the participants today. But with that, I'll take this opportunity to welcome CA Hansraj Chugh, and I welcome you, sir, to share your keynote address for this webinar.
Yeah, thank you, Maitri, for a wonderful introduction. Though I believe so, many of the participants they know me directly, being a council member. You see, like these kind of programs which are meant for some objective and the purpose, how professional can get benefit of the various knowledge of the speakers and the people around. The Global UDAN, the word is itself reads many things about the program. Program is structured by the this directorate for the development of international trade services and WTO directorate under the able convenership of Abhay Chhajar and Deputy Convener well supported to this directorate's CA Dr. Sanjeev Singhal and the whole team of the directorate. I'm really grateful and thankful to them for bringing me here to speak to the participants on this subject as a keynote speaker to address the how impact this profession carries for the in the time of the whether it is the changing time we look at or otherwise in the growth from the old era to the new era, which started in the year 1992 from the local economy to the global economy or the controlled economy to the free economy. We have with us CA Rajneesh Kumar, who is a speaker on this very program, and Maitri will be really taking us forward to moderate the program and whatsoever the questions are in hand or which will be discussed and taken care or whatsoever comes through the participation that will be taken care of by the speaker, and till the time I'm available, I'll also be participating with. The team as a secretary of this directorate, Monica, she is so active and so participative. She always take care of the many things new for the development of this directorate for the benefit of the membership. You see, like if we talk about global UDAN, naturally no country in itself is suffice. The holistically speaking, globe is one, but it keep on changing because of the dynamic things around us. Many things which whenever there is a change in the country's political arena or the political system or the leadership at the country level, many thought comes in, which earlier we talk about when the globalization started, the globe is one. But it is not the facts. Fact may be something different. As we understand with, everyone looks at their own country also for the benefit whatsoever suits to them, and look forward then beyond. If we talk about the India has taken shape of its current structure, started with 1992 when India thought of signing and with the WTO. That was the changing era. Pre 1992, we all understand with, if we talk about when the India took a shape of the independent India, the things were little different. No much of the industrialization. Rather, it was the industrialization was also being controlled by the public sector undertaking only through the mechanism of the Industrial Development Regulation Act 1951. And before that, India was suited to the only an agriculture economy. The thing starts keeping or the pace to start with, like it was a conservative or the controlled kind of the atmosphere before that. And if we talk about the real, that was we talk about either a approach like Russian culture, Russian approach, or the communist approach. That if we really name it differently, so it was like a communist approach. No growth required, nothing much to do. We ourselves are sufficient, or we does not need much to look beyond. But 1980 or 80 onward, India thought of let us change ourselves. And that was the Indian culture. That was a thought that was also not like a global culture, but it was an Indian culture with the smaller numbers or the small change here and there. And we ultimately started looking at the some growth, maybe 2-3%. And then 1992, we thought of let us move to the growth, which has really been a growth of with the global things to be taken together, and maybe 9-10% growth. And now we range around 6 to 7, 8% growth. That really brought us to the bigger picture for the country which was earlier looked at a conservative approach, a approach which is really been controlled kind of things. Now we are a free economy. Whosoever wants to comes to India, India most welcomes in within the parameters of the national interest or in the public interest. If Indian business community wants to go beyond through the mechanism of the taking the money out like through the ODI, so they are also being welcomed overseas. With the approach like we are a economy of that nature where the free flow word is being looked at one nation concept. With those thought, India has started looking at, and fortunately, with that thought process only, we could see everything available to our country, whatsoever we thought of, whatsoever we can afford with, whether in the system of technology or our home needs, or the industrial needs, or the needs for anything we want to enjoy with, whether it is the vehicles around us to import with or to locally procure, everything available around us, which every person who can enjoy with or who can have the money to spend, one can have with. So these kind of the thought process we have grown with, and fortunately, India in the terms of the economy measurement, if we talk about running into the $1 trillion economy now. Earlier, it used to be talk about the initial 5 billion, 500 billion would be achieved in 50 years. But the subsequent we can match with every 10 years. In 60 years, we could reach $1 trillion economy. I'm not giving the brief of the figures, but the growth measurements and the subsequent every $1 trillion economy, maybe 5, 7, 10 years. Now look forward. Now we are there at the $4 trillion economy now. So in the time to come, we look every 2 years or maybe 1.5 years, will be adding $1 trillion economy in the time to come. So that is the strength of our understanding. Unless until we collaborate and we engage ourselves with the business community of the overseas, and our business community is also been taking a step. We are not limiting to our services or our goods should not be meant for our own country. Our own country, naturally, one wants to build or one wants to manufacture in our country itself, but it has to be meant for the global, so for the other countries also. With those kind of thought process, our growth has started coming in. So in this today's webinar or today's program, which is a continuous every week, will be going with in the different series. The second series is with of the global this UDAN is meant for the current position revolution of the global trade and how India's trade policy is supporting to that kind of thought process, either through the foreign trade policy or the free trade agreements, whatsoever is coming in or whatsoever already existed or whatsoever new are being supposed to be there or the whatsoever new thought is being given with to the US, to the Europe countries or to the even EU countries and the not limiting to EU, but to the other countries also, many more countries also like UK also. So many newer things are being expected within the next few years or maybe in the very recent years, which we look at in the few months even. We will be having an arrangement with the USA also, with the UK also, with the Europe also. We are already in existence many things. So you see, like it is the starting point is the like clarity in the business, how to growth to happen with, how the employment to be taken shape of, how the Indian should look at, like we have to be developed nation in the time to come by 2047. With those kind of thought process, our policy to be well supported, our preparation of our business community and our industrial enterprises or the our startup ecosystem or the our those who are really wants to be well supporting to the economy of the country, they have to be accordingly prepared well before time so that ultimately we achieve the target of becoming a developed nation and create something good for the nation so that we are being recognized globally. India is moving forward with the speed of maybe 10% growth in the time to come. With those kind of parameters, our nation is geared up. The policy framework by the Ministry of Commerce and Industry are been matching with recently in the our startup ecosystem. Mahakumbh also happened in Delhi, where our leadership has really brought many newer things to understand with. It's not limiting to our daily needs, but how we have to be ready with the on the front of the technology also ultimately creates the value for the our system of the knowledgeable or knowledge, our knowledge to be properly utilized, our mindset for the enterprising to be optimally to be taken shape of, and with those kind of parameters, we have our growth is bound to happen with. Now, friends, let me speak something about the era which has been since 1992. You see, like if we talk about foreign trade policy, so that is the base earlier, which used to be a import-export policy. So under the this trade measures, trade policy development, we have signed an with the WTO. Before WTO, it was a case like some arrangements between through the orders, through the import control orders, export control orders. Once signed the WTO, so then we have to come out in a legal format. So legally, India brought in one law, which is called this Foreign Trade Development Regulation Act, which is the base law and different economic and commercial law also changed accordingly, whether it is the Income Tax Act, whether it is the FERA, Foreign Exchange Regulation Act, which lately been brought in altogether new law for FEMA, Foreign Exchange Management Act. And same way, in this system, this Foreign Trade Development Regulation Act, under which the government is being authorized to come out with the policy. And the policy nowadays, whatsoever has with us is the Foreign Trade Policy 2023, which is a open-ended policy, no timeline. Earlier, it used to be a timeline like 5 years, and every 5 years there used to be a new policy. But this is an open-ended policy which is there with us and which carries lot of advantages position for the purpose of the exports, many benefits which Rajneesh ji will be going through or will be discussing in details, but many benefits for the exporting community, which through the process of identifying or getting into our mind, no taxes and duties to be exported. Whatsoever the taxes and duties has been levied with, that has to be reimbursed or that has to be nullified by way of the either duty drawback schemes or road tax schemes or the other methodology. And the service sector also, as we understand with India has taken shape from the structured agri economy to the industrial economy, and going forward more than 50% of the economy is being captured by the service economy because of the advantageous position of the country by way of the serving to the globe. And the government has identified many areas in the service sector, 12 champion sectors also, where the services of our community also, like if we talk about accounting and the financial services, this has also been made very clear. This has been brought in the champion sector, where we have we need to gear up, we need to draw our attention, and ultimately we as a service provider for the accounting and financial services, we can make ourselves ready to serve to the globe. Many GCC, Global Capability Centers, or the Global Delivery Centers or global system is been framed in our country, which has a benefit for our fraternity members also, our chartered accountant fraternity also. So this foreign trade policy naturally has its own framework, which though base law is the Foreign Trade Development Regulation Act, empowered through that act, the government come out with this policy, which has a many relevant schemes, whether it is the schemes we called about import of the capital goods at a concessional or at a duty-free, which Rajneesh will be discussing in details. Same is for the import of the raw materials also duty-free for the benefit or for the purpose of manufacturing and production of the export goods, which ultimately goes out of the country beyond our borders. So same is with the some promotional schemes under Chapter 3. So those are the many good schemes, and many ways India brought in this SEZ, EOUs, and many different schemes under the different law also. Recently, very popular is the GIFT City, which we all understand with, which is a new to understand with a global system. In Gujarat, this government has brought in one concept of the gift city, where tax benefits are available, and the services of that nature, which has been financial services, like many services which are of that nature, which are being brought in there, and if it is being exported and served from that very place to the global recipient of the services, so then 0% taxes. Even the income tax also for the 10 years benefit is available. So those are also the initiative which government thought of and brought in into the system. Now, friends, talking about the tariff system, which we all understand, which has disturbed to the whole world. So only one policy decision can control and when can disturb to the ecosystem of the economy or the export and import. That has been recent story, though this has been referred with by the US government. But by that time, India will be well prepared through the mechanism of the free trade agreements or the some other arrangements where being India being a well thought or the proactive country, always think about their own benefits and benefits to the other countries also. India is a balanced kind of the economy where it does not think about oneself, but it thinks the country or the sportive country also go along with those kind of thought. India has well responded whatsoever the consequential impact by way of the tariff which were being thought of by the US government to levy on the Indian imports also in their country. So those kind of the challenges which came in and which has been stopped for the time being. You see, like in the custom law, if we talk about the globe is one, there is a system of the ecosystem, or there is a eco terms, there is a terms which is being used globally in the one thought. If India is using the same some Incoterms, one any terms, the same is been well defined in their country also. So with those kind of thought, this custom law is there globally. So in the tariff and non-tariff, people have a something to control in their hand through the tariff barriers, through the non-tariff barriers, quality and the pricing or the levy of the duty barriers like DGTR, trade remedies. We have a system of the safeguard duties also. We have a system of the anti-dumping duties also, which covers or which controls or which we have a many things at our command, where in the national interest or the public interest we can have that kind of the tariff barriers around us, or the non-tariff system also, like quality to be or the some kind of the in the case of the some BIS certification or the other systems also. So which I personally believe so in the interest of the nation, every interest, every country, every nation has some kind of the controls or some parameters by which they make use of those parameters and in the interest of their own country. Friends, if we talk about the globalization, so India has got benefited because before 1992, India's economy was not well responded, or it was not of that time which we are today. We are today are leverage of whether it is the technology or not, or producing for the globe. Like if we talk about one particular product like mobile, India been 98% of the item which was being consumed in the in mobile, either mobile or the its parts thereof, it was being imported with. Now more than 80% manufactured in our country are being exported at the same time. That is the advantage of the our policies of the government, and that is the advantage of the foreign trade policies or the FDI policies or the ODI policies also. So that advantage are being undertaken here, or that advantage are being taken by the government by way of the framework of the its policy. So my idea of sharing all those things are just to understand with India's trade policies are very conducive, looking at its own needs employment generations, need of the public available funds for the deployment available with the consumer side. They can buy anything and everything whatsoever within their reach, whether it is for their household things, or whether it is for their capital spending, or whether it is spending for their looking at their own stature in the society. So, to my understanding, if policies are being framed like that, so which is beneficial to the public at large, which is good for the nation also. India is so proactive in creating that kind of the atmosphere today. India is always been forward-looking country, which always think about how the future to be taken care, or how things to be brought in outside the country, whether it is into the manufacturing sector or the service economy also. So with those kind of thought, the India has always been, or the country has always been thinking about the bringing out the policy. Now also, since the disturbance came in on the tariff by the US, India every day through the consultative approach from the different export promotion councils, or the from the chambers, chamber of commerce, or the different industrial organization, industrial associations, India through the consultative approach is thinking about, and hopefully these disturbing or these challenging times will be over, and India will be again put into the track to build that kind of the growth path, though it has not disturbed so far, and likely it will be in the benefit of the country itself, which I can foresee being into this area to understand, and I can foresee India will be on the growth path with same percentage or maybe better percentage in the time to come. So with this key note, or with this understanding, I once again welcome each and every participants, and this today's webinar, which is to look at the global trade revolution and the India's trade policy, matching with through the foreign trade policy, matching with the agreements which we are going to come to sign with the many different countries, whether it is the trade remedies aspects in our country, or the tariff or non-tariff structured changes required, and how the India's the business community or the industrial houses or the exporting community is responding with, or the importers are being responded with because of the many things which are related with the FEMA also, or the money transaction between the countries to countries also. Many things are there to understand with, and thanks to the directorate, this is this development of uh, trade services and WTO directorate, which is who's always been proactive to bring out something good for the fraternity and bring out these kind of programs, so that ultimately they are being benefited with, to serve to their clients in the best of the manner by way of the acquiring best of the knowledge. Thanks to the chairman Abhay Chajarji and CA Dr. Sanjeev Singhal the convener and deputy convener, both are quite proactive, quite active in bringing out the newer programs. Rajneesh ji will be taking care of the as a one of the speaker, as a speaker, rather sole speaker of the program, and CA Maitri Swaminathan will be taking us through as a moderator of the very program. Now, over to Maitri to take this program forward. Over to you.
Thank you, sir. That was, a snapshot of our entire journey from 1980s. You called it the Russian communist approach to, the Indian culture from 1980. And then you told us about 1992, how from local, we became a global economy. And you took us to the entire journey. It was fascinating for me to hear about, how we moved from FERA to FEMA and how we've got, various schemes in customs, the SEZ. You spoke of tariffs. You spoke of how tariffs went away in between and how they came back and disturbed the world, which is on everybody's mind. And you covered that in a snapshot. And globalization. So all of this, which you covered in a snapshot, very thankful to you for having taken us through that entire journey. And with that, I'll also welcome our panelist for the day. Our eminent panelist today is CA Rajneesh Kumar. So welcome, CA Rajneesh. By way of introduction, CA Rajneesh Kumar is a chartered accountant and a law graduate. He has more than 10 years of experience in the professional practice relating to indirect tax, foreign trade policy, customs law, and FEMA. He serves various Indian corporates and MNCs in the above areas of practice and is a regular speaker on GST, foreign trade policy, and customs law. He also serves clients in setting up new factories or units at SEZs, export-oriented units, etc. And currently, he's working as a senior management at Osgun Consultants Private Limited. So, CA Rajneesh, warm welcome to you this afternoon, and we are looking forward to hearing from you to take forward what Hansraj ji has so kindly shared as a snapshot to take us forward in details on that. So, over to you, Rajneesh ji.
Rajneesh ji,
You're on mute, Rajneesh ji. If you could unmute yourself, please. Thank you.
Thank you, ma'am. Thank you, Directorate, for inviting me as a speaker in this seminar. And thank you, Hansraj sir, for snapshot on the topic of this seminar. And welcome you all in webinar on the global trade regulation in India's trade policy and role of chartered accountant, organized by Directorate for Development of International Trade Services. Outline of today's presentation is introduction about global trade, innovation and global trade, US reciprocal tariff on India, and suspension of country-specific ad valorem rate of duty until 9th July 2025, and declaration of national emergency in USA, US content benefit, foreign trade of India, or measure for ease of doing business for India trade policy. International trade means there is exchange of goods or services between two countries. It makes life easier of human and countries by exchange of goods between two countries. It provides access of resources of one country between two or more countries. It fuels technological growth. And these are the benefit of global trade. Innovation revolutionizing the global trade. Technology and digitalization makes trade faster, cheaper, easier, and more predictable. Technological advancement ensure transportation, communication, and logistics, and identify better route for transportation of goods from one country to another countries. Global trade ensure interconnectedness of one country with another countries. Recently, US President on 2nd April 2025, US President issued executive order on reciprocal tariff, imposing ad valorem duties. There are two kinds of duties in customs. One is a specific rate of duties, and another type is ad valorem rate of duties. A specific rate of duties is charged with respect to quantity, like 20 rupees per kg, 20 rupees per piece. It is called a specific rate of duty. And ad valorem rate of duty is charged with respect to valuation, and it is measured in percentage. And the rate of duty in reciprocal tariff on India is 26%. This is the 26%. However, this reciprocal tariff is suspended till 9th July 2025. US ने ये सारा रीजन दिया है रेसिप्रोकल टैरिफ लगाने के लिए। यूएस का कहना है कि जो यूएस में जो कंजम्पशन हो रहा है वो जीडीपी का 68% कंजम्पशन है। हाउएवर इन अदर कंट्री कंजम्पशन इज consumption is little lower. In Ireland, ratio of consumption with GDP is 27%. In Singapore, ratio of consumption of GDP is 31%. In China, 39%, and South Korea 49%, and Germany 50%. However, consumption of GDP in USA is 68%. In USA, manufacturing just represent 11% of US GDP. US manufacturing आउटपुट, जो यूएस का जो मैन्युफैक्चरिंग आउटपुट है वो जीडीपी का 70% है, 70% रह गया है 2023 में, जो कि 28% हुआ करता था 2001 में। फ्रॉम 1997 to 2024, यूनाइटेड स्टेट lost job in manufacturing sector 5 million job. However, US President state कि one manufacturing job creates 7 to 12 job in other related industry. Hence, manufacturing job is essential for the growth of the country. Research and development expenditure is reduced in USA. R&D expenditure by US multinational is grown in China at rate of 13%. However, it is reduced in USA to 5% only. Means R&D MNC is incurring expenditure in R&D in China 13%. However, in USA only 5%. And these are the reason for levy of reciprocal tariff by the US President. US President declared national emergency in USA under the National Emergency Act of USA. Due to lack of reciprocity in bilateral trade, disparate tariff rate and non-tariff tariff barrier, suppressed domestic wages and consumption कम हो रहा है यूएसए में, इस वजह से constitute an unusual and extraordinary threat to the national security and economy of the United Nations. So Donald Trump, President of United States of America, declared national emergency with respect to this threat. These are the activities before levy of new tariff. On January 2025, US President signed American First Trade Presidential Memorandum. Under this memorandum, US President directed its administrative officer to investigate the cause of USA large and persistent annual trade deficit. Annual trade deficit का रीजन पता करने के लिए उन्होंने अपने ऑफिसर को बताया. Further, on 13 February 2025, signed presidential memorandum entitled Reciprocal Tariff and Trade that directed further review of trading partner. उन्होंने अपने ट्रेडिंग पार्टनर जैसे चाइना, जापान, इंडिया, जर्मनी, यूएयू सब जितना भी ट्रेडिंग पार्टनर है उसके साथ क्या ट्रेड रिलेशन है यूएसए का, उसको इन्वेस्टिगेट करने के लिए बोला. और ऑन 1 अप्रैल 2025 यूएस प्रेसिडेंट को जो एडमिनिस्ट्रेटिव ऑफिसर है उन्होंने अपनी फाइंडिंग सौंप दी. और इसके जैसे ही यह इन्वेस्टिगेशन रिपोर्ट मिला यूएस प्रेसिडेंट को, तो ऑन 2 अप्रैल यूएस प्रेसिडेंट ने ये नया यूएस ट्रेड टैरिफ रेसिप्रोकल ट्रेड टैरिफ लगाया और इंडिया के लिए उन्होंने 26% लगाया है. हाउएवर, अभी जो 8 अप्रैल को इन्होंने फिर एक एग्जीक्यूटिव ऑर्डर पास किया है और वो इस ट्रेड टैरिफ जो इंडिया के रिलेशन में है उसको मतलब ऑल ट्रेडिंग पार्टनर के लिए सस्पेंड कर दिया है. नॉट ओनली इंडिया बट फॉर ऑल द वर्ल्ड एक्सेप्ट रिपब्लिक ऑफ चाइना. चाइना के लिए उन्होंने सस्पेंड नहीं किया है अभी और अदर कंट्रीज के लिए कर दिया है. लेकिन बेस एक जो रेट है 10% वो अभी भी लगेगा, लेकिन ये 26% नहीं लगेगा. बट इसमें ट्रेड टैरिफ में एक उन्होंने बेनिफिट दिया है कि अगर यूएस कंटेंट मटेरियल मतलब यूएस ओरिजिनेटेड मटेरियल अगर एक्सपोर्टेड आइटम में 20% या 20% से ज्यादा है तो उस पे ये रेसिप्रोकल टैरिफ नहीं लगेगा. यूएस कंटेंट बेनिफिट. ट्रेडिंग पार्टनर रिस्पॉन्स, उस ऑर्डर में जो 2 अप्रैल 2025 में जो ऑर्डर पास किया है प्रेसिडेंट ने, उसमें ये बोला है उन्होंने कि अगर कोई कंट्री ट्रेडिंग पार्टनर रिटेलिएट करेगा तो उसका फर्दर ये जो रेट होगा वो इंक्रीज या एक्सपेंड कर दिया जाएगा। अगर कोई कंट्री रिटेलिएट नहीं करेगा तो उसको रिड्यूस कर दिया जाएगा या लिमिट कर दिया जाएगा। तो इंडिया ने रिटेलिएट नहीं किया है, इसीलिए इंडिया का रेट जो है अभी उन्होंने होल्ड कर दिया है अप टू 9 जुलाई तक। लेकिन चाइना ने रिटेलिएट किया है, तो चाइना को रिटेलिएट के जवाब में उन्होंने इसी प्रोविजन के अंतर्गत उस रेट को इंक्रीज कर दिया है अप टू 105% तक। मतलब चाइना से जो प्रोडक्ट ओरिजिनेटेड होगा और यूएसए में एक्सपोर्ट होगा उस पे एडिशनल ड्यूटी, मतलब इन टर्म एज ए सेफ गार्ड ड्यूटी इन यूएसए लगेगा 105%। बट इंडिया से या किसी और अदर कंट्री से अगर एक्सपोर्ट होता है तो उस पर सिर्फ एक बेस रेट अभी 10% उन्होंने लगाया है। लेकिन मैक्सिको और कनाडा को उन्होंने एग्जेम्प्ट किया है। टू कंट्रीज आर एग्जेम्प्टेड फ्रॉम दिस रेट। ये सस्पेंशन ऑर्डर है जो अभी 8 अप्रैल को उन्होंने पास किया है। ये सस्पेंशन ऑर्डर जो मैंने पहले ही बता दिया है कि ये विथ होल्ड हो गया है अप टू 9 जुलाई 2025 तक, लेकिन सब्जेक्ट टू एडिशनल एड वैलोरम रेट ऑफ ड्यूटी 10%। 10% एड वैलोरम मीन्स 10% ऑफ द वैल्यू लगेगा ही अभी भी बेस रेट। अब इंडिया ट्रेड की बात करते हैं। अभी इंडिया ट्रेड में एक आरबीआई ने एक ड्राफ्ट रेगुलेशन, आरबीआई ने अपना एक रेगुलेशन पास किया है। रेगुलेशन ड्राफ्ट डाला है पब्लिक कमेंट के लिए। उसमें एक प्रोविजन उन्होंने डाला है कि जो फॉरेन ट्रेड करता है इंडिया, उसमें फॉरेन ट्रेड जो इंडिया में गवर्न होता है दैट इज गवर्न बाय द फॉरेन ट्रेड पॉलिसी ऑफ इंडिया। फॉरेन ट्रेड पॉलिसी में एक पैरा 2.52 है, वो पैरा बोलता है कि अगर आप फॉरेन ट्रेड में कोई एक्सपोर्ट कर रहे हैं तो आपकी इनवॉइसिंग जो है वो इनवॉइसिंग जो डिनोमिनेट करेंगे दैट मस्ट बी इन फॉरेन करेंसी एंड रियलाइजेशन इज आल्सो इन फॉरेन करेंसी। लेकिन आरबीआई का जो अभी ड्राफ्ट रेगुलेशन आया है वो उन्होंने बोला है कि एन ऑथराइज डीलर मीन्स बैंक थ्रू विच, जिसके थ्रू आप रियलाइज करते हैं, वो ऑथराइज डीलर शैल इनकरेज इनवॉइसिंग एंड सेटलमेंट ऑफ क्रॉस बॉर्डर ट्रांजेक्शन इन INR। मतलब अब जो इनवाइसिंग और रियलाइजेशन वो इंडिया चाह रहा है कि जो इनवाइसिंग हो और रियलाइजेशन हो वो INR में हो, जिससे कि INR भी एक फॉरेन यूजेबल करेंसी बन सके। अभी जो फॉरेन करेंसी जो होता है वो डिटरमिन होता है IMF का बाय लॉ से। IMF मींस इंटरनेशनल मॉनेटरी फंड। एज ऑन डेट ओनली फॉलोइंग दीज करेंसी आर द फॉरेन यूजेबल करेंसी: यूरो, जापानी येन, पाउंड स्टर्लिंग, US डॉलर, चाइनीज रेनमिनबी। These are the foreign currency। और जब मैनर ऑफ रिसीट एंड पेमेंट ऑफ रेगुलेशन जो आरबीआई का है वो कहता है कि आपकी जो रियलाइजेशन है अभी एज ऑन डेट जो है उसकी बात हम कर रहे हैं, वो इट मस्ट फॉरेन एक्सपोर्ट के अकाउंट पे जो आपके रिसिप्ट आएगी इट मस्ट बी इन फॉरेन करेंसी। लेकिन अभी जो ड्राफ्ट रेगुलेशन आया है उसमें आरबीआई ने बोला है कि आपकी फॉरेन में जो एक्सपोर्ट करते हैं वो आप INR में ऑथराइज डीलर को इनकरेज करने के लिए बोला है अपने इंपोर्टर और एक्सपोर्टर को। अगर ऐसा होता है तो हमारा INR भी फॉरेन करेंसी के लिस्ट में इंक्लूड हो जाएगा। बट एज ऑन डेट इट इज ओनली ड्राफ्ट, इट इज नॉट लॉ राइट नाउ।
I think one question from our participants over here that will be relevant. It says that how can CAs help reduce the trade-related risks for Indian companies? Or आपने अभी भी you spoke of the RBI draft regulation, and if this draft regulations come true, probably some trade risk for companies will be reduced. So I want to take this question that's been received from the participants, that how can CAs help reduce the trade-related risks for Indian companies?
Okay, ma'am, trade relation, once we talk about trade risk, there are various kind of risk is associated with the business. And right now, custom is focusing on Indian customs. One department is Directorate of one department under custom is Directorate of International Customs in India. It is formulated in 2016. And its objective is to maintain relation with the foreign custom, Indian custom with foreign custom. And one certificate is AEO certificate. Once any company is getting this certificate, then their risk will be minimized. I will come to this topic and will answer his question in detail on related with the risk associated with the business. But my point is this, that invoicing maybe once the RBI regulation is notified, invoicing can be made into INR and realization can be also made in INR, so that INR will become foreign currency once it is notified by the RBI and incorporated into the IMF International Monetary Fund bylaws. Right now in bylaws, only these currency are the foreign usable currency. 1, 2, 3, 4, 5. These 5 currency. Once the INR is included, 6 currency will be the foreign usable currency. In India, foreign trade is the matter of union. It is listed into Anti 41 of the Schedule 7 of Schedule 7 of the Constitution of India, which is as follows. Trade and commerce with the foreign currency, import and export across custom frontier or definition of custom frontiers, front lines is the matter of union. Means any law related with the import and export can be made by the central government, not by the state government, because it is a matter of union list. It is not a matter of a state list or not a matter of concurrent list. In India, foreign trade policy is issued in exercise of the power granted under Section 5 of the FTDR Act, Foreign Trade Development Regulation Act. Section 5 empowers central government of India to formulate foreign trade policy or amend the foreign trade policy. Now, what is the meaning of central government? Because in central government, there are a lot of ministry. So now how we can identify which ministry is the central government? So any central government, there is allocation of Government of India Allocation Business Rule 1961. As per this rules, business is allocated between various ministries, as Ministry of Commerce, Ministry of Finance, Ministry of Heavy Engineering. So Ministry of Commerce and Industry, Banij and Udyog Mantralaya, Department of Commerce is the central government for the international trade. As per this rule, Government of India Allocation of Business Rule. And following are the activity which comes under the jurisdiction of Department of Commerce. In the Ministry of Commerce, there are 2 departments, Department of Commerce and another department is DPIIT. And international trade, dealing with the international agency like WTO, GATT, ITC, GFC, United Nations, etc. comes under the jurisdiction of Department of Commerce. Agreement, international commodity agreement can be entered by the Department of Commerce only, because it comes under the jurisdiction of Department of Commerce. All matter related with the foreign trade, import and export policy, the special economic zone like Noida Special Economic Zone and other special economic zone is governed by the Department of Commerce and Department of Commerce under the Ministry of Commerce and Industry. State trading enterprises, all these activity is exercised by the Ministry of Commerce through the Department of Commerce. Hence, the central government means the Department of Commerce under the Ministry of Commerce and Industry from time to time formulate and announce the foreign trade policy by way of notification in the official gazette. Once the foreign trade policy is made, and foreign trade policy is made by the Department of Commerce on the suggestion of DGFT. DGFT is the nodal agency in Department of Commerce. DGFT full form is Director General of Foreign Trade Policy. Earlier, foreign trade policy was issued for 5 years, like Foreign Trade Policy 2009-2014, Foreign Trade Policy 2002-2007. But recently, Foreign Trade Policy 2023 is notified, but it is not for the 5 years. See, this is the duration of the foreign trade policy. As per the duration of foreign trade policy, into the foreign trade policy incorporating provision related to export and import of goods shall come into effect from 1st April 2023 and shall continue to be in operation unless otherwise specified. Means this foreign trade policy will be amended as per the requirement of government, but it is not for 5-year plan. Earlier, foreign trade policy was issued for 5 years, but Foreign Trade Policy 2023 is issued for and will be amended only as per the requirement of government. Its life is not fixed for 5 years. And these are the allocation of business rule. We already discussed this topic. Now, international trade. International trade can be done in the form of goods or services or technology. In case of goods, there will be import of goods, export of goods. Import of goods, simply defined as bringing goods from a place outside India to India, is called import of goods. And mode of import may be through the sea, land, or air. Similarly, export means taking goods from India to a place outside India is called export of goods. And mode of export may be through the land. Land is used for neighboring country like Bangladesh, Nepal, Bhutan, or sea or air. In case of service and technology, export may be through the following 4 modes. Mode one is the cross-border supply. Mode 2 is consumption abroad. 3 is the commercial presence, and 4th is through the movement of natural person. In case of cross-border supply, supplying services or technology from the territory of another country into the territory of India. Example, from the territory of another country into the territory of India without physical movement, without physical presence, or without movement of natural person. For example, a doctor sitting in Germany can advise his patient in India through electronic means. It is an example of cross-border supply. Or it is import of service. Similarly, from India into the territory of any other country, it is export of service. For example, a teacher in India can send teaching material to the student in any other country, is cross-border transaction. Second mode is consumption abroad. Supplying services or technology in the territory of another country to the Indian service consumer is import of service in the territory of another country. And in pictorial format, we can understand all these 4 modes through this picture. In case of cross-border, consumer is situated into country A and supplier is situated into country B, and supplier from country B rendering services to the consumer in country A without coming to country A. It is example of cross-border. In consumption abroad, consumer recipient of service is situated into country A and supplier is situated into country B. Now, recipient will come to the country B for taking services. It is example of consumption abroad. And third is the commercial presence. Consumer is situated into country A. Supplier is situated into country B. Now, for rendering services to the consumer of country A, supplier in country B will open its branch, subsidiary, or wholly owned subsidiary, joint venture, or licensing office or representative office in country B to render services of country A. Then it is called commercial presence. And 4th mode is the presence of natural person. Recipient of services is situated into country A and supplier is situated into country B. Now, supplier will come to country A to render the service. Suppose doctor or chartered accountant is situated into country B, and recipient of services is situated into country A. Then chartered accountant of country B will come to country A to render services of country A. So it is example of service through the movement of natural person. These 4 are the mode through which services are rendered and defined as export or import of services in Foreign Trade Development Regulation Act. But it is not defined as in GST or other laws. In GST, definition of export of service and import of service is different. In India, as you ask question, how the risk is minimized and what will chartered accountant role? This question will be answered in this slide. In India, one of the highest authority is the NCTF, National Committee on Trade Facilitation. And this committee is constituted in line with the para 106 of the Foreign Trade Policy. India has ratified WTO Trade Facilitation Agreement in 2016. One of the agreement of WTO is the TFA, Trade Facilitation Agreement. And the objective of Trade Facilitation Agreement is to ease the business in each member country. And as per the WTO, if TFA is implemented in all member countries throughout the world, then the cost will be reduced to 14.3% and boost the global trade by up to 1 trillion per year. And one organization in WTA is the Trade Facilitation Agreement Facility to render its member to achieve the TFA objective. So in India, NCTF is constituted as per the TFA of the to implement the TFA means Trade Facilitation Agreement of WTO, and to facilitate coordination and implementation of the TFA, NCTFA is a single window committee in India, and it is headed by the Cabinet Secretary of India, and its constitution is like this. NCTF in India is headed by the Cabinet Secretary, and its steering committee is headed by the Revenue Secretary and Commerce Secretary, and it has 4 working committee. One is committee which identify the bottlenecks in compliances and regulatory digitalization, technology, infrastructure upgradation, and time release study. Time release study means what is the cargo clearance time in India, how import is taking too much time in clearance throughout the ICD, inland container depot, CFS, container freight station, LCS, land custom station. These working committee identify the time gap, and these are the structure. And the TFA bureaucratic delay, and the objective of TFA is to minimize bureaucratic delay जो government officer वगैरह delay करता है, and red tape means those regulation which are hurdle, जिसका compliance करना easy नहीं होता है, तो उसको TFA इन सबको minimize करके, और अगर TFA implement हो जाएगा तो reduce trade cost by average of 14.3% and boost global trade by 1 trillion per year. How does the TFA cut red tape at the border for easier trade? Easy release means the goods, when coming to the custom port in India, it will be easily released, and clearance of the goods for import consignment and export consignment. Availability of information and rules and procedure. Automated e-services. Automated e-service now in customs, every service is through e-office only. And there is custom is paperless. Now Indian custom is paperless. They are all the application, all the submission, all the approval in customs of India is through online mode only. Discipline for fee and penalty. As per the TFA agreement, Trade Facilitation Agreement of WTO, there will be discipline for fee and penalty. Indian Customs Authority earlier, they are levying fee and penalty मन मर्जी से कर देता था, discretionary. Now they have to follow the discipline for levy of fee and penalties. Harmonized process and standard, consultation and appeal, advance ruling. These are the basic objective of the TFA. And the constitution of TFA is this. And NCTF, National Committee on Trade Facilitation, they are issuing its action plan. And now, right now, 3rd action plan is in picture. And this is the action plan 2024 to 2027. And this is the National Trade Facilitation Action Plan 3. Or earlier there was action plan 2 already implemented. Now 3 is into picture, and which is to be implemented by 27. And the objective of this action plan is to modernize the cross-border clearance ecosystem, digitalize, seamless, efficient transfer, risk-based and technology-driven press. Means the in custom they will examine the transaction on risk based, not on the transaction based. Technology driven process means e-office. Now in customs at Delhi airport they are issuing e-pass. So every process is through e-office only to reduce logistic cost and boost export competitive Atmanirbhar Bharat by 2024 and to become US 500 trillion economy within 5 years aligned with the vision of Viksit Bharat. NCTF objective goal is to reduce the import clearance within 48 hours for sea cargo. ICD means Inland Container Depot, LCS land custom station, and 24 hours for air cargo. In case of export, within 24 hours for sea cargo, ICD and ICS, and 12 hours for air cargo. To bring down overall cargo release time. As per the this is the objective of the NCTF to achieve in time in this action plan 24-27. National Trade Facilitation Action aim is to improve ease of doing, reduce in cargo release time, paperless regulatory environment, transparent and predictable legal regime, improve investment climate through the better infrastructure. Recently, towards ease of doing business in customs, certificate of origin word is replaced with the word of proof of origin. Certificate of origin is now in customs. Certificate of origin is used to claim the benefit under FTA, Free Trade Agreement of India with other countries. Now, certificate of origin is replaced with proof of origin. Certificate, what is the difference between certificate of origin and proof of origin? Certificate of origin means certificate issued in accordance with the trade agreement, certifying that goods fulfill the country of origin criteria and other requirements specified in the said agreement. But proof of origin will include declaration also. Declaration means the declaration by the exporter. So proof of origin is wider term as compared to the certificate of origin, because proof of origin will include declaration by the exporter. Suppose India is importing any goods from USA. So Indian importer currently need to furnish certificate of origin to claim the FTA benefit at the custom port at the time of clearance. But now onward, they can give simply a declaration from foreign exporter that the goods is originated in USA, and this declaration will be valid as a proof of origin at the Indian port. Indian Custom Authority, proper officer of the custom, will accept declaration. Only in case of doubt and suspicion, they will further examine. And the proof of origin is wider as compared to the certificate of origin. In customs, section 28A deals with the manner and procedure of claim of FTA benefit. And this section is amended by the Finance Act 2024 and replaced the word certificate of origin with the proof of origin. And it also defines issuing authority. Issuing authority is defined this way. Issuing authority means authority designated for the purpose of issuing authority. It is the old definition for the certificate of origin, and now issuing authority is redefined as means any authority or person designated for the purpose of issuing person means the person exporting the goods, means approved exporter. But this scheme will be available only for the approved exporter. And its impact will be flexible, simple, and reduce reliance. There will be no specific format. Simply a declaration will be accepted as proof of origin. Easy, and now it is easy for compliance. Now, one question comes me, ki how the risk will be minimized by the chartered accountant. There are a lot of MRA by MRA. MRA is the mutual recognition agreement by the India to with other country. In customs, following are the trade MRA partner of India right now. This country, Taiwan, USA, UAE, Australia, Russia, India, South Korea. These countries are the MRA partner in customs. And in custom, MRA is entered by the DIC, Directorate of International Customs with other country. And right now, only these countries are the MRA partner in terms of custom, but 21 MRA is under negotiation, and hopefully it will be concluded by the end of June. As DIC in its seminar on 8th April, they said 25 MRA is under negotiation, and it will be concluded before June, before the end of the June 2025. Now, what will be the CA role? Suppose country A is the exporting country. Country A export. First, we should understand what is MRA. MRA is the mutual recognition agreement, is an agreement by which two or more countries agree to recognize one another conformity assessment. In service, these are applied on the recognition of professional qualification. The mutual recognition relate with qualification, academic certification, and experience required in service. Regulatory bodies of various professional services like engineering, accounting, accountancy, architecture, etc. are encouraged to enter MRA with their counterpart, like ICAI India is entering MRA with other countries. In same way, Indian custom is entering into the MRA with the customs of other countries. Exporter is situated in country A and importer is in country B. If the now we are talking about the benefit of AEO, authorized economic operator, and exporter is non-AEO, and importer is also non-AEO. Then clearance time will be from this to this, means high clearance time is there. If the exporter is AEO and importer in country B is non-AEO, then clearance time will be reduced from this to this. This will be the reduction in the time of clearance. And exporter is non-AEO, but importer is non-AEO. So this side from clearance time will be reduced from here to here. This will be the saving from this to this. This time will be the saving for the clearance. Hence, every importer and exporter is required to have AEO certificate in their countries. And this AEO certificate can be help. CA can help the company for getting AEO certificate to their client, those who are engaged into the international supply chain management. Country A, benefit of AEO MRA. If AEO MRA is there, for this country there are MRA. This is the country. Exporter in country A, and they are AEO, and country B, they are non-AEO. Then time for clearance will be from this to this, means time is this. And if it is AEO, then time will be reduced from this to this. The clearance time will be reduced. What is the deferred duty payment? Deferred duty payment now in India is focusing on deferred duty payment in customs. And for deferred duty payment, there are two schemes. One scheme is mover, that is manufacturing and other operation in warehouse. And another scheme is AEO certification for importer and exporter. If deferred payment, in case of deferment of a scheme, bill of entry filed from first day of month to 15th of the month, and duty can be paid for total accumulated duty can be paid on 16th of the month. Bill of entry filed from 16th day of month to last of the month except March, then duty can be paid on first day of the following month. Or bill of entry filed from 30 to 31st March, then duty can be paid for 31st March. What deferred duty payment means, you are filing bill of entry, and objective of deferred duty payment is to delink payment of custom duty with clearance. Right now, you cannot clear your goods at custom port without payment. But if you are availing deferred duty payment, so you can clear your goods without payment of duty at the port of clearance. And you can pay total duty by 16th of the month for all the bill of entry filed from first day of month to 15th of the month, and 16th of the month to last of the month except the month of March. You can pay first of the following month, and bill of entry filed from 30 to itna. It is compulsory to pay. Or how to avail the deferment payment? You have to mention the fact of availment of deferment duty payment into your bill of entry, and it is denoted as denoted with the alphabet D. And if you are clearing your bill of entry in transaction mode, means the clearance payment before clearance, then it is represented as T. T means transaction, and it is authorized through one-time password. Our deferred duty payment is available only to the authorized importer and exporter, those who are AEO certified importer. And one person is authorized having, and they will receive OTP over their mail, and then they will authorize bill of entry for deferred duty payment. Anyone having query related with this deferred duty payment? Hello?
You can go ahead, Rajneesh ji.
Okay, thank you. What will be the consequence if the duty is not paid on due date? Then interest will be charged from the date of bill of entry till the date of payment. And secondly, deferred duty payment facility will be stopped for further bill of entry. And then restoration of deferred duty payment application is to be submitted to the ICD commissioner where the bill of entry was filed. Now, these are the kind of agreement which are entered by the one country with other country. One is PTA, Preferential Trade Agreement. Another is CESA. CESA full form is Comprehensive Economic Cooperation Arrangement. CEPA, Comprehensive Economic Partnership Agreement, Custom Union, Common Market, Economic Union. These are the type of agreement which are entered by one country with other country. In preferential trade agreement, there are two countries which agree on the few products to levy reduced rate of duty. In PTA, two or more partners agree to reduce tariff on agreed number of products, and that agreed number of product is called the positive list of the PTA. PTA is the preferential trade agreement. Another type of agreement entered by one country with other country is the FTA. FTA is broader than the PTA. In case of PTA, there is a positive list of items for which two or more countries agree for lower rate of duty. And in case of FTA, there is a negative list of items on which they do not agree to reduce, but except negative list of items, all items are subject to the reduced rate of duty. The key difference between FTA and PTA is that in PTA there is positive list of product on which duty is to be reduced. In FTA there is a negative list on which duty is not reduced or eliminated. Thus, compared to PTA, FTA are generally more ambitious and coverage of tariff line. Now, what is the CESA and CEPA? CESA is the Comprehensive Economic Cooperation Agreement and Comprehensive Economic Partnership Agreement. CESA and CEPA is the extension of FTA. FTA and PTA just deal only with the goods, but CESA and CEPA also deal with investment, intellectual property, and regulatory measure and cooperation. So CESA and CEPA is the extension of FTA. These terms describe agreement which consists of, and CESA gives integrated package on goods, services, and investment along with other area including IPR, intellectual property right, competition. The India-Korea CEPA is one of the such example, and it covers broad range of activity, trade facilitation, custom cooperation, investment. Custom union like European Union. In custom union, partner of the countries may decide to trade at zero custom duty among themselves. However, they maintain common tariff for the rest of the world. In custom union, few countries come together and decide to, partner country may decide to trade at zero custom between the country in union, and they maintain common tariff against for the rest of world. An example of the custom union is the European Union and the SACU, Southern Africa Custom Union. Common market. Common market is the integration provided by common market is one step deeper than the common union. A common market is custom union with the provision to facilitate free movement of labor and capital, harmonized technical standard across member etc. An example of the common market is the European common market is an example. An economic union. Economic union is the common market extended through further harmonization of monetary policies, shared executive judicial. In economic union judicially भी same होता है जितने country उस union में आ जाते हैं. And example of the economic union is the European Union. How the CESA and CEPA is different from FTA. CESA Comprehensive Economic Cooperation Agreement or Comprehensive Economic Partnership Agreement is different from the FTA on two counts. CESA are more comprehensive because it covers investment, IPR, competition also, but FTA deals with just a list of goods. FTA focus mainly on goods. CESA or CEPA is holistic because it covers services, investment, and other government procurement. How to settle or redress the dispute is covered. CESA, CEPA look deeper at the regulatory of the trade than FTA. It is an account of this that encompasses mutual recovery. Major FTA, PTA, and CEPA of India are following. Risk of a business can be identified by chartered account by giving services on these FTA, PTA, and CEPA. These are the APTA, Asia Pacific Trade Agreement. It is between following 5 countries: India, ASEAN, TIG, India, ASEAN Trade in Goods Agreement, and these are the following 11 countries are into this agreement, and it is example of FTA. BIMSTEC, it is between following 7 countries: Bangladesh, India, Myanmar, Sri Lanka, Thailand, Bhutan, and Nepal. It is under negotiation. It is not right now finalized. GSTP is the global system of trade preference, and it is between the following 44 countries, and it is example of PTA, Preferential Trade Agreement. So these are the example of PTA, FTA, and CESA, CEPA. Further, fifth is the IBSA, India, Brazil, and South Africa. These are the between 3 countries, India, Brazil, and South Africa. It is under negotiation. SAFTA, South Asia Free Trade Agreement. It is between India, Pakistan, Nepal, Sri Lanka, Bangladesh, Bhutan, and Maldives. And it is example of FTA. ISL FTA, India, Sri Lanka FTA. It is between Sri Lanka and India, and it is example of FTA. India, Malaysia, CESA. It is example of CESA. India, Singapore, CESA, it is example of CESA. Wrongly, it is mentioned FTA. Japan, India, CEPA. India, Korea, CEPA. Why FTA is entered by one country with other country? Country negotiate free trade agreement for number of reasons: to eliminate tariff and non-tariff barrier between 2 countries, easier market access into one another. Once the rate is reduced, the one country consumer can go to the another country. For example, ASEAN has a FTA with India, but not with the Canada. ASEAN has a FTA, means free trade agreement with India, but not with Canada. ASEAN custom duty on leather shoe is 20%, but under FTA with the India, it is reduced to 0%, zero duty. Now, assuming other costs being equal, an Indian exporter, because of this duty preference, will be more competitive than a Canadian exporter of the shoe. So Indian exporter will gain edge over the Canadian exporter. Country A and B having FTA. Country A has high tariff and large domestic tariff. The firm based in country C may decide to invest in country A to cater a domestic market. However, once A and B sign FTA and B offer better business environment, C may decide to locate its plant in B. So because of this benefit, one country enter into FTA with other countries. How India is placed globally in terms of bilateral. India is very cautious and it comes late in a PTA and FTA. Right now, India has preferential access, economic cooperation and free trade agreement with 55 individual countries. India has signed bilateral trade deal in the form of CESA, CEPA, FTA, PTA with 18 group countries. India is late and cautious, started in concluding comprehensive preferential trade agreement covering substantially all the trade with some of its trading partners. Now, authorized economic, what is authorized economic operator scheme into international trade? Authorized economic operator scheme, it is one of the certification scheme in Indian customs for the good and best company in India. AEO is business entity, means it is not premises based. It is issued to IEC on the basis of IEC, import and export of the company, involved in international movement of goods, requiring comprehensive compliance with the provision of the national custom law and approved by or behalf of national administration. And what is the structure? There are a structure of Indian for the importer and exporter. AEO certificate is issued in AEO Tier 1, AEO Tier 2, AEO Tier 3. And for other economic operator in India, international trade like custodian, warehouse keeper, CHA, custom broker, warehouse operator, it is AEO LO. AEO LO means logistic operator, authorized economic operator, logistic operator certificate.
Rajneeshji, one question from our participants. How can a company become an AEO importer?
For AEO importer, there are conditions that the net worth of companies should be positive throughout the three preceding financial year in case of large company. And in case of MSME, net worth should be positive for the last 2 financial years. Net current assets means current assets minus current liabilities should be positive throughout the immediately past 3 financial year in case of large company, and for 2 years in case of new company. MSME company. And there should be minimum 25 bill of entry or shipping bill in case of large company for immediately preceding financial year, and 10 bill of entry or 10 shipping bill. Suppose 4 bill of entry, 4 import consignment, a company have 4 import consignment and 6 export consignment, then also this company is eligible if it is MSME. But there should be minimum 5 document in half financial year, means April, May, June, July, August, September. April to September, there must be 5 import or export document. So current assets positive होना चाहिए. Current assets should be positive in 2 years in case of MSME. Net worth should be positive. Company should be 2 years old in case of MSME or 3 years in case of large company. There should be no show cause notice on account of fraud, forgery, misstatement, suppression of fact. And if there is so-called notice, then also certificate is issued, but the ratio of disputed tax or disputed duty should not exceed 10% of the total duty or drawback claimed in the preceding years. These are the basic criteria. Then In case of MSME, there are 3 annexures. Then it is to be applied on AEO portal is there. AEO Government of India AEO portal, aeo.gov.in. You have to take registration, and there are 24 zones all across India. You can apply on the basis of in which zone the company have major import and export. Suppose Chennai, Mumbai, Delhi, Patna, these are the zones through which you can get your certificate. And finally, certificate is issued by the Directorate of International Customs in Customs, Delhi. Hope your question is answered.
Absolutely, thank you. There's a further question on the deferment of payment of custom duty.
Yes.
The question is the scheme not available to European countries for deferred payment?
No, deferment payment is available for all the countries, provided you are AEO T2 holder or T3 holder company. It means importer in India is T2 or T3 certified company, then they can avail the deferment duty facility.
Thank you. Please go ahead.
Background of AEO scheme in India. The genesis of AEO scheme date back in September 2001 event in USA, which made all the government to realize that supply chain itself could be used for terror activity, and a need was felt to make the supply chain secure. Since the supply chain is controlled by the trade, the custom administration in partnering the trade in order to secure the supply chain. After the event of 11 September 2001, US started CTPAT certification, Custom Trade Partnership Against Terrorism program. Later, WCO, World Custom Organization, adopted SAFE framework of standard in 2005 in order to secure, facilitate the trade. SAFE framework of a standard has 3 pillars comprising of custom to custom. Means Indian custom to custom partnership means Indian custom will check the process and procedure of Australian customs to custom to business means Indian custom will check the process security of the importer in India, and custom to other government stake means, and it is called PGA, participating government agency. Like in customs, suppose you are importing food material, then FSSI is the other government stakeholder. If you are importing electronics item, then the Ministry of Item. If you are importing Ayush homeopathic or Ayurvedic medicine, then the government department of Ayush is the other government stakeholder. So SAFE framework of standard is based on following these 3 pillars: custom to custom, custom to business partnership, and custom to other. AEO program is the result of custom to business. Means Indian custom will check the security and process of its Indian business partner. SAFE framework of India standard is implemented in India by custom circular number 33 by 2016, dated July 2016. Aim of the AEO program are following are the aim to provide business entity with internationally recognized certificate. AEO certificate is one of the certificate which is recognized in 185 countries. If any importer or exporter of India is certified as AEO certified company in India, then its certificate is valid internationally in all the member of WCO, World Custom Organization. To recognize business entity as secure and reliable trading partner, to incentivize business entity through defined benefit that translate into saving in time, secure supply chain from point of export to import, enhance border clearance privilege in MRA, mutual recognition agreement, minimize security related disruption for flow of good, reduction in time and related cost, custom advice and assistance. AEO is not mandate. AEO is mandatory for business involved in the supply. No, it is completely business decision whether to apply for AEO or not. But once a company is AEO certified, then there are a lot of benefit for AEO certificate. What are the benefit? Following are the benefit. First benefit is the DPD, direct port delivery. It will save lot of cost for the exporter and importer. So direct port delivery before exporter has to store the goods into CFS, and CFS levy charges, that is CFS charge, container freight station charge. But once the company is AEO certified, they can directly deliver the goods at port. Similarly, in case of a direct port entry for export, DPD is available for import container and DPE is available for the export container. Waiver of bank guarantee. For any bank guarantee, suppose you are taking EPCG export promotion of capital goods license, advance license, then once you are AU certified, then there will be no bank guarantee. Waiver of merchant overtime fee. Merchant overtime fees, if you are clearing your product at port beyond the working hour, then custom levy merchant overtime fee. But if you are AEO certified company, then there will be no overtime fee. Deferment payment facility will be available for AEO certified company. Waiver from transactional. If the company is AEO certified company, then there will be no transaction wise audit. There will be PCA. PCA means post clearance audit. Post clearance means audit will be done after clearance. Waiver of solvency certificate for custom broker. If the custom broker is AEO certified, then there will be no solvency certificate required from them. A lower risk. Nowadays, custom is levying alert, risk-based alert. But if you are AEO certified company, then there will be low risk in your profile. Hence, there will be low chance of alert from the customs or DGFT or other government agency on your export or import consignment. Faster dispersal of drawback. Drawback or refund will be easily and will be dispersed by the custom on fast track basis. Under FTA, PTA, CESA, or SEPA, you can issue certificate of origin on self declaration basis. You need not to apply the certificate of origin to the specified authority like Apparel Export Promotion Council, Export Inspection Council. You are not supposed to apply. You can self-declare your certificate of origin to your goods. Email regarding arrival departure of vessel. You will get email from the custom department for your tracking of your vessel. 24/7 clearance of your import and export consignment at port and airport. No merchant overtime. Frontline treatment. Your clearance will be through the green channel. ID card to be granted to the authorized person. AEO certified company's employee will get ID card for entry into the custom port. There will be no hurdle to visit custom port for the AEO certified importer. Whether all AEO operator entitled for DPD, DP? No, only AEO, all AEO, yes, T1, T2 status holder are entitled for DPD. DPD means direct port delivery and DPE means direct port entry facility. In recent in customs, advance ruling is simplified and the definition of advance ruling is also amended. But earlier, advance ruling was available for an activity which is proposed to be undertaken by the applicant. However, now advance ruling is applicable for any goods prior to its importation. But your case is not pending at any forum like appellate authority or any other investigation getting authority. Then you can apply for advance ruling. In earlier advance ruling, there will be a 3-4 member for deciding the ruling. But now only a commissioner can decide and give your advance ruling for any classification, exemption, or other specified confusion. And there is two advance ruling authority in India, one at Delhi airport and other at Custom airport. And jurisdiction, few state comes under the jurisdiction of advance ruling authority of Mumbai, and few state comes under the jurisdiction of Delhi state. And fee for advance ruling is only 10,000. In case of any confusion regarding classification, availment of exemption, or other confusion, you can apply in advance ruling of the custom, and they are giving easily advance ruling, and it will avoid any litigation in future on related with the classification, interpretation, or exemption of any notification, etc. So it is very good office in customs. One of the scheme recently announced in custom for ease of doing business is custom on arrival movement for storage and clearance regulation. But it is limited only for few products which comes under the custom tariff heading 85 to 8517 and 8548, and it is electronic goods, mobile etc. In case of mobile etc, mobile component etc imported, importer can import and it out of charge will be issued without any payment, and examination etc of by the custom officer will be done by the premises of the importer. So our clearance at authorized import premises include movement of import goods of authorized importer from port to authorized import premises for storage, examination, clearance, removal, etc. can be done by the importer. Eligibility: only following types of importer are eligible for this authorized import premises. Importer should be recognized as T2 and T3 certificate. Place is demarcated with already licensed warehouse. Already there should be private bonded warehouse license under Section 58 of the Custom Act. Resultant product should be under the heading 8517 and 8518. And such import 47 and 60 there should be no bill of entry under 47 and 60. Then it is allowed. For this authorized import premises, importer must declare intent to avail this facility in bill of entry. Goods arriving at port are granted automatic clearance, means without any intervention of the custom officer. In case of suspicion on doubt, they can withhold the consignment for the examination pending approval from the government agency. And in these three cases, they can not clear the consignment. Otherwise, the consignment will be automatically cleared, means out of charge will be issued automatically by the customs port. Mover is also one of the good scheme towards ease of doing business in custom. Mover stand for manufacturing and other operation in warehouse. It is one of the duty deferment scheme, means you can import any input or capital goods without duty, and you can install the capital goods into your factory and use that capital goods without any payment. Similarly, you can import any input without duty. You can do your processing activity on input, and once the material is finished, then finished goods is cleared from your factory on account of sale or other reason. Then at the time of sale, custom duty will be leviable and payable. And GST is also payable and custom duty is also payable. Means there will be a saving of working capital for this period. For manufacturing cycle, you are not supposed to pay the duty. So mover is also very good scheme, but it is in this scheme you can defer your duty. When defer duty means you need not to pay duty at the time of clearance. You need to pay duty after once the finished goods is cleared from the factory. And in case of capital goods, you need not to pay duty at the time of clearance, and you can use your capital goods without duty. The silent feature of the mover scheme are the jurisdictional commissioner of custom is the single point of approval under the scheme. A single application cum approval form has been prescribed for use by both the applicant and custom. The license granted under the scheme remain valid without the need of renewal. Means once it is issued, it need not require any renewal. It is lifetime certificate till it is surrendered or cancelled. The approval is quickly given after attach. All the process is taking 1 to 3 months for getting mover license. Type of business covered: any business desiring to conduct manufacturing or any other operation can apply under the scheme. Existing business can. Sourcing of capital goods and the scheme give flexibility in sourcing. Sourcing of capital goods input is allowed from SCZ and FTWZ. FTWZ is Free Trade Warehousing Zone. Fully flexible in clearance of goods. The goods produced under the scheme can be exported or cleared to domestic product as per demand. No export obligation is present. In this scheme, there is no export obligation. it is beneficial for MSME also because there is no minimum investment criteria in this scheme, and MUBAR is a duty deferment scheme. It is not duty exemption scheme. Because duty is to be paid, but at the time of clearance of finished good, not at the time of clearance at the port. Thank you.
Thank you, Rajneesh ji. It's really wonderful, the depth of your knowledge and how much you shared with everybody on duty deferment, on SEZs, on various aspects, how to become an AEO importer, what are the benefits, etc. So really, thank you for sharing your depth of knowledge. We've received a number of questions from our audience, and I'll start raising them with you. Request you to share your responses for them. So the first question we've received is, how is India adapting its trade policies to compete globally?
How India is
Adapting its trade policies to compete globally.
India is member of the WTO, so India need to follow the WTO principles also. And WTO from custom perspective, there is an organization that is WCO, World Custom Organization, and India is following all the framework standards etc. issued by them. So India is following, and WCO is the nodal agency for all the. Suppose SAFE framework of standard is issued by WCO in 2016, and it is adopted by the India also in 2016. So India is adopting all the policy of the policy in line with the WTO agreement.
Thank you. The next question is, how can CAs, what role can CAs play in helping companies go global?
Global. For taking benefit of MRA, company need to obtain OBIN number. OBIN number is Overseas Business Identification Number. Suppose India have a MRA with the USA, and Indian custom has MRA with the USA. So USA, they are issuing MID number, manufacturer identification number. So India need to apply with the DIC, Directorate of International Custom, and DIC will forward their application to the USA authority, and they will issue MID to Indian exporter. So CA can help for getting OBIN number, MID number, use of best of MRA benefit. There are various MRA is executed by the authority, PTA, FTA, CESA, CEPA. All these agreements can be implemented only with the help of CAs.
Thank you, Rajneesh ji. A lot of opportunities for CAs over there.
Yes, but we have to study a lot PTA, FTA, CESA. 21 MRA is under negotiation and to be finalized shortly by the end of June, this June only.
So a lot of opportunity coming up for chartered accountants is what I hear.
Yes.
The next question for opportunities is, what kind of opportunities are there for CA in the field of international trade compliance and advisory?
For example, suppose we are getting AEO certificate. So for AEO certificate, we have to submit SOPs for all the functions and operation of our organization, like how the finance is working, how the order is placed, how the quotation is given, how quotation is finalized, what is the security, how the document is retained, how the document is created, how the document is safe and securely stored from free rat, fire, rat, water, how the data and information is backed up. For these, all the policies to be drafted for the company, then only they will get the AEO certificate. And there are lot of security policies to be drafted for AEO, and only CA can help how the security is deployed at the port, how the security is taking round in the company. So we are not only the watchdog of the financial data, we can help them to save their cargo, document, premises, and other activities also, because we have a good knowledge. So we are assisting various companies for drafting of their policy on the basis of our experience, and we assist in various companies in this field also.
Fantastic. So we've spoken a lot, Rajneeshji, about the
And
AEO.
right now, these are the MRA partner of the India. These are the these countries are the partner right now. India's MRA partner, and 21 country will be in customs. Will be done into this June.
Fantastic, fantastic. So we've spoken, Rajneeshji, a lot about the AEO. So if there is a company which is a non-exporter, but very rarely they have some imports, is there any benefits for such a company to take an AEO registration?
Yes. AEO is for the importer also or exporter also, but you must have 10 consignment, 10 import, 10 export in preceding financial year. Minimum criteria is there. There you must have 10 consignment of either import or export or together. Suppose 5 import and 6 export, then also it is eligible. And now from the benefit point of view, only if you are AEO certified company in India, then your business partner, supplier into overseas will also get benefit, because it is internationally recognized certificate. It is recognized in 185 countries, because it is issued by, although issued by Indian custom, but issued under the guidance and standard issued by the WCO. So it is internationally recognized certificate. And once you are AEO certified, then what is the benefit? Benefit is you can directly deliver your good to the custom port. You need not to store. Right now, if you are not AEO certified, then you have to, for the export, you have to store the goods in first CFS, that is custom freight station. And for that storage, the CFS will charge the rentals to the exporter and importer. But once you are AEO, you can directly enter your goods into the port. So there will be saving of CFS rentals. Second, then product will be cleared on green channel basis. There will be no delay. There will be no scanning. You will get email throughout the about tracking of your consignment. Your company employee will get ID for entering into the custom premises, because custom premises is secure premises. General people is not allowed to enter into the custom port and airport in cargo area. But AEO certified importer 2 employee can get ID. Self-sealing, because you are importing and exporting, then you have to fix the seal on your container. If you are not AEO, then you have to do sealing under the supervision of customs officers, customs and GST officer. But if you are AEO certified company, then you can seal your container on self basis. You can generate certificate of origin. Right now it is renamed as proof of origin. You can generate on self basis. You need not to apply for the Export Promotion Council or other specified authority. You can get benefit of norms fixation in DGFT, Director General. Norms fixation can be on the basis of self-rectification basis. You need not to go to norms committee for fixation. So these are the benefit for AEO certified companies.
So it does seem very beneficial for even occasional importers to take that.
Yes. It is
AEO certification.
it is very beneficial certificate. Without AEO certificate, no importer exporter will not survive.
Wonderful.
But although there is no direct cash benefit, but there are a lot of intangible benefit attached with this certificate.
So, Rajneeshji, with your vast experience, what skills should CA develop to stay relevant in international trade?
International trade is all about the cargo security. How the cargo is moving from one country to another country, how the cargo is safe, secure. We have to focus on supply chain management, how the supply chain because supply chain management is based on the security perspective. We have to understand security, how the security how the product is securely going from India to abroad. So there are a lot of, we have to study safe framework of a standard, how the bill of lading is generated, how IGM is filed, how EGM is filed. We can assist in it because they do error into, we can assist in amendment of bill of entry, shipping bill. There are various kind of work is there. We can assist our client and we are assisting.
Fantastic. Further questions from the viewers. So, is there any interest or additional charges if there's deferment of duty and normal payment? I mean, I know you said there are penalties for late payment.
Interest free, provided you pay within due date. For bill of entry from 1st of the month to 15th of month, you pay on 16th, then there will be no interest. But if you fail to pay on due date, then interest will be levied. And your further deferment payment facility will be stopped also. If there are two occurrence, two failure, deferment payment facility will be stopped after two failure.
Okay. And would you be able to, Rajneesh ji, give a brief about automated clearance in customs?
Automated, it is recent concept. Notification just came into March, but right now it is pilot project only for the telephonic mobile product only. And we can also, CA can also assist mobile and electronics company for getting this permission from, and it is to be applied to the custom. So suppose your company into Delhi, then your jurisdictional custom is Delhi customs. Your company, your factory is into Chennai, then jurisdictional custom will be Chennai customs. So there is a specified forms in regulation only. It is very simple form. We have to give justification if we want clearance. Once the premises is authorized, there will be no intervention of custom officer. Company employee will be custom officer. You can take the goods from custom out of charge order. You can bring the goods to your factory, and if custom want any inspection examination, then they will come to your factory, and then they will examine the goods at your factory. Through this way, we can save warehousing charge, CFS charge, transportation charge. We can save a lot of cost for our company. But it is initially it is only for limited product, but as per the Trade Facilitation Committee, it will be extended for all bulky product also, like fertilizer in time to come. Fertilizer, other charcoal import, etc. They are under discussion.
Okay. Rajneesh ji, with you've shared us some examples, but can you share more examples for where a CA has played a key role in international trade success?
International trade success. In international trade, there are a lot of activity which CA can perform, like SBB. Once that any company is dealing with their related party, then SBB, a special valuation branch, they will examine that the goods imported or goods exported is at the fair value, or is there any impact on relation. So CA can help for SBB order, a special valuation branch. It is very critical examination by the custom authority, because if they charge they create SBB load, then there will be higher duty. Suppose they be 20% SBB load, then duty will be increased by 20%.
Okay. The next question from our participants is, how do trade policies affect Indian businesses, especially SMEs, small and medium enterprises?
Government is focusing on MSME, and all the policies extended to MSME also. Right now, AEO is also extended for MSME. Mover is also in Mover. There is no investment criteria. Mover MSME can also go for Mover scheme if they are importer. So this kind of benefit is also extendable to MSME.
Okay. So, one of the aspects of the topic we are discussing today is what changes can we expect in future. So, would you be able to share, Rajneesh ji, what the future holds for international trade? We've talked of already ease of doing business. We've talked of various agreements that are coming up. 21 countries that are going to enter into the agreement soon. What are other emerging areas of practice for chartered accountants in this area of international trade? If you can just educate us on new areas that are coming up.
The objective of objective of government in case of import and export is direct port delivery and doorstep delivery and doorstep pickup. Means you need not to go to the port, and port will not come to you. Direct port delivery and direct port delivery and direct door pickup. In case of export, custom will come and pick up material, and in case of import, they will directly deliver at your door, and you need not to go to visit port or etc. In case of custom, there are a lot of confusion regarding classification, exemption. So we as a chartered accountant, we can help for correct classification, whether ICGR benefit is availing. Various companies, due to lack of awareness, they are not availing the correct benefit in for custom. So we can assist for getting all the benefit available under customs on sector specific basis.
Okay. The next topic is, Hansraj ji at the beginning talked of, developing countries and how they are really international trade is helping them move towards, faster development. But one aspect is the digital transformation and how, international trade has become so digitally dependent. But developing countries have challenges on, things like inadequate laws, inadequate infrastructure on digital thing, lacking, digital skills in the people. So, what is your view? Where is India on this digital skills and moving towards digital transformation for international trade?
For MSME sector, people lack in people have lack of knowledge in digitalization. They are not using correct, but they are using PayPal, etc. But they don't know how to generate BRC, FIRC. So we as a chartered accountant, we can guide MSME and bank. For suppose in case of export, exporter is supposed to realize the payment of export within 9 months. But various exporters, they are particularly in MSME, they export, but they don't know the time period, and they don't know how to realize the money. So we as a chartered accountant, we can help them for this. Or in case there is outstanding export problem, they are receiving the notice of enforcement directorate, RBI, and that is technically called EDPMS or IDPMS management. In case of EDPMS, that is export data performance management system, and in case of import, it is import data performance management system. And if your any bill of entry is not settled within 9 months, then it is outstanding into RBI system, because once you are importing your goods, then you are mentioning your AD code, means authorized dealer code, into your bill of entry. Then you have to settle the payment of import within 9 months. Similarly, in case of export, you have to realize the payment within 9 months. But various, particularly MSME, they are not closing off their bill of entry and shipping bill, and that bill of entry and shipping bill is outstanding. And due to that, they face bank charges of 1 lakh, 1.5 lakhs, and they are facing a lot of cost only due to this reason, because of lack of knowledge on export and import regulation.
So we are into the last 2 minutes of our session, Rajneesh ji, and I'd really like to share my heartfelt thanks on behalf of all the participants in today's session, because you've really, dipped into your wealth of knowledge and shared it freely with everyone who's participated here today. It's been a very, very educative session in terms of, learning about the mover scheme, AEO registration and how it is helpful to the importers, how you can defer the payment of custom duty, save on working capital, the FTP scheme, and various other schemes, the countries with which upcoming agreements are there, where there are so many opportunities for chartered accountants to contribute with their knowledge and grow themselves. So this has been a really, really educative session for me particularly, I'm sure for all the participants. And I'd really like to extend my heartfelt thanks to you for sharing your knowledge. And thanks to the WTO Directorate, the Development of International Trade Services and WTO Directorate of the ICAI, and convener CA Abhay Chhajar, Deputy Convener CA Dr. Sanjeev Kumar Singhal, and our keynote speaker CA Hansraj Chugh for choosing this topic and for inviting CA Rajneesh. With that, I'll sign off. This is CA Maitreyi Swaminathan, and I'll sign off with that. Thank you so much.
Thank you. Thank you.